If you're going to buy that much, you're going to buy it in thousands or tens of thousands or 100,000 plus small transactions, day and night, minute by minute. I really got to look at precious metal. You go to the Robert Kiyosaki, silver, gold, or Bitcoin. You buy them when they're $100 billion market cap. When something hits $100 billion, when they're 10 times bigger than the next biggest thing, and they're $100 billion.
One of the most influential voices in the Bitcoin space. This isn't just a story about cryptocurrency. It's about how a seasoned CEO managing hundreds of millions in corporate treasury systematically rejected traditional asset classes and ultimately chose Bitcoin as the superior store of value. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Okay, and this is where I got to give a plug to my friend Eric Weiss. Eric Weiss, running his own Bitcoin investment, advisory service, and he's saying, this is what I'm doing, and I'm just dismissing him like, whatever, this Bitcoin thing, I don't know what it is, but it's crazy, crypto, and it's like shell game. So he keeps mentioning it, and I keep thinking about it. And then one day we're sitting around my pool in Miami, and he starts explaining it, and something clicks in my head that maybe this is a pretty good idea. Like I have been beaten over the head with a 2x4. And so I'm a bit more open-minded, but I started thinking about it. And then I realized I really got to look at precious metal. You go to the Robert Kiyosaki, silver, gold, or Bitcoin, choose one. And so we get down to choosing, are we going to invest in precious metals or Bitcoin? I already dismissed commercial real estate. I dismissed a market basket of equities, the spider, NASDAQ 100. That stuff's just not compelling. I tell you what I want, right? What I want is something that might be cut in half that can go up by a factor of 10.
Asymmetric payoff.
By the way, that's what any intelligent investor wants. That's what you want when you bought Amazon in 2011. That's what you were getting when you bought Apple Computer, when the iPhone came out. That's what every rational winner is getting. You want a 10x upside, and then you want, I can even live with losing all the money. Although, here's the catch. Like every good investment, in my opinion, if you're going to put a lot of money at work, the winning formula for the past 10 years or 15 years has been find a digital dominant network that's dematerialized some fundamental thing. The mobile network is Apple, the information network at Google, the video network, YouTube, the social network, Facebook, even Twitter, speech network, dematerialized, and Amazon, the retail network. You buy them when they're $100 billion market cap. When something hits $100 billion, when they're 10 times bigger than the next biggest thing, and they're $100 billion, they're probably going to crush everything. And at that point, I remember lecturing Wall Street guys in 2011, 2012 about Apple, and here's what they said. They said, well, we know you love Apple and you think it's going to beat the world. But, our idea is if Apple goes up too high, we're going to sell the stock and we're going to buy HP and Dell so we can diversify your computer portfolio. And then if all your tech names, if Apple and Amazon and Facebook go up too much, we're going to sell those so you don't get too much in technology. Okay, and my answer was, if you think about it broadly, there's no example of a successful company in the history of the world that wasn't a technology company. Standard Oil was a technology company. If you go to Hershey's factory, you'll find they figured out how to manufacture 50,000 candy bars in a clean room, and it's the most sophisticated piece of technology you will ever see in your life. You think they're not technology companies, you're just ignorant. There is no winning investment in a company that's not a technology company at their time. General Electric, there was a time when electricity was interesting technology. Boeing, Same thing before we could fly. So the idea you sell too much tech is a foolish idea, in my opinion. The idea that you sell Apple when it gets too big is another foolish idea. Like, well, there's never been a company that was 500 billion in market cap, what, or trillion, right? There are people saying that. There's never been a company as valuable as Apple because there's never been a company as valuable as Apple. And another way to say that is there's never been a company that could create a software camera, change the way it works, and ship it to 1 billion people overnight for a nickel. And if you could actually ship a product to 1 billion people overnight for a nickel, you could create a lot of value with no cost. So obviously these digital networks, Facebook, Apple, Amazon, you could see them, they're all around us. They're insanely value generating, but there's another dynamic here, which is the network effect, right? Metcalfe's law. It's like as soon as everybody uses Facebook.
This moment is critical. It illustrates a cognitive shift from rejecting Bitcoin as noise to considering it as a legitimate contender in the investment landscape. Once Saylor becomes open-minded, he doesn't jump blindly into Bitcoin. Instead, he frames the decision within a broader capital allocation problem.
And before we get there, I'll make one more point. We had 500 million in cash. We wanted to buy our own stock back with it or put it into some asset like Bitcoin. Our first step is to announce that we're thinking that through. Our second step is announce a tender offer for our stock, 250 million. That took place the same day we announced that we bought the 250 million in Bitcoin. Then we have a 20-day period where we wait for our shareholders to decide if they're going to tender and how much. So we had to move through that. When we got done, we actually bought $60 million worth of our stock. That hit the wire in the last few days too. So our real goal was to invest it all. The shareholders' decision as to how much of that will be tender, right? So we wait for them. And then after the tender offer, we had excess cash in our treasury. So the next step is for us to invest our treasury cash. So that's what we announced today. In fact, we've wrapped it all up. So substantially 95% of that money is either invested in our stock or in Bitcoin. And we've accomplished that in short order, right? Like over the course of 6 weeks or 4 weeks. Now, regarding acquiring that much Bitcoin, first of all, I can't give you like exact blow-by-blow details because I've got security issues and the world is watching and I can't. But what I can do is I can describe to you, if you were running a company, how you should think about this. If you were in my position, which is you're going to go and you're going to audition a bunch of institutional grade exchanges. You're going to work through and look for institutional grade custodians. You're going to look at all of the security issues, all the technology issues, etc. You're gonna think about the team. You're gonna build a relationship with them, and then you're gonna buy. If you're gonna buy that much, you're going to buy it in thousands or tens of thousands or 100,000 plus small transactions, day and night, minute by minute, over the course of many days. So it's not like we're going in. I'll sit and I'll watch this happening, and I've got a great team, a great team that I've worked with, and some excellent professionals. They are brilliant geniuses at what they do, but let me tell you, they've got great technology too, right? It's like, and you got to have the right technology, you got to have the right team, and then you have to be very patient, like very, very patient. I'll watch people walk in on Monday morning and, it's like, okay, some dude just got up at 9 a.m. and decided to buy some Bitcoin and the price spikes. Whenever I see that, I'm like, well, that guy won't be in the market very long, because no one that really wanted to buy a lot of Bitcoin would be so silly as to spike the price so hard. I can tell you this, which is, we bought $425 million worth of it, and we never ran the price. Not a dollar. Like, you don't know
Pretty
I'm
impressive.
there,
Yeah, it's
right?
pretty
Like,
impressive.
if I'm in the market, you wouldn't know that I'm trading against you ever, because that's not how you get stuff done, right? Let the market come to you. So the good news is, if you want to buy hundreds of millions or sell hundreds of millions, you can do it and not be seen, and you can do it without moving the market materially or panicking anybody. But you have to have the right team, the right tools, and the right discipline. You can't be in a hurry.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.